What's up, millennials? In exchange for about 10 minutes of your time, today we're going to take a look at the valuation of a company called Momentus. Momentus is a company that will be acquired by the SPAC that's currently trading under the ticker symbol SRAC. Before we start, a few things first. First of all, I have not done extensive research about this company, so today we're just going to take a look at the valuation of this company according to the company itself and according to the SPAC. Secondly, don't trust me, verify me. I'm just documenting my journey here. I'm just a random dude on the internet. Third, Stock O'Clock. These are very short 1-minute videos that I post every single trading day with news about the stock market. And last, Discord. I made a free Discord channel for you to join. If you leave your name and email address at nesami.com/discord, you'll get access to it. Before we start talking about the valuation of this company, I'd like to give you a very brief overview of what this company does, more or less. And well, the space companies have gotten a lot of attention, a lot of popularity lately, mainly because of the space ETF, which is going to be founded by ARK ETF, or ARK Invest rather, which is the ARKX ETF, right? We're not sure if this company is going to be inside that space ETF as well, but hey, it's going to especially give some popularity to space companies like this one. So as we can see, Momentus provides services for the space economy. They provide space transportation, for example, to transfer cargo in space. They also are going to do, in the long term, mining of asteroids and the moon, for example. Kind of crazy to me to think about that, but okay. And they are also going to focus on in-orbit servicing, in-space assembly, basically meaning that they're going to assemble things in space. They're going to repair vehicles, satellites in space as well. And they say that they have a clear path to profitability and a $1 billion in EBITDA in 2025. It is quite a bold claim, but as you can see, they don't have any revenue for the first couple of years, or at least in 2020, they didn't have a lot of revenue. In 2021, they're probably not going to have a lot of revenue. And they start getting some more revenue in 2022. But the main operations are going to be quite a few years from today, right? They also expect to have about $1.2 billion in EBITDA in 2025. $1.2 billion, that is the number that we are going to use today. So remember that number, $1.2 billion. Okay, let's now jump into the valuation of this company. And let's first take a look at the pro forma valuation based on a share price of $10 per share, which is where they started trading, right? Okay, so basically like all other SPACs, they are using a base share price of $10. Then they are going to have 151.2 million shares outstanding after the merger. We can also see that they're going to have $312 million in cash on their balance sheet. And now we can do already a few things. We can take that base share price of $10 per share, multiply it by the amount of outstanding shares after the merger, and then we're going to arrive at a pro forma market cap of $1.5 billion. Then we can say, okay, $1.5 billion, we can now take that market cap and take off the amount of net cash of $312 million. And then we're going to arrive at an enterprise value of $1.2 billion. So basically that means that with a share price of $10 per share and 151.2 million shares outstanding, Momentus, the company itself, is worth $1.2 billion, right? But if we go into TradingView, we can see that the current price per share is $21.40. So $21.40. That now gives us a market cap, a pro forma market cap of $3.2 billion. And if you take off the amount of net cash, the enterprise value, so basically the value of Momentus, the company itself, is $2.9 billion. The next thing we're going to do is to look at their future valuation. How do we do that? We're going to use two numbers for this. First of all, we're going to take a look at their future EBITDA number, and then we're going to multiply that by a certain EBITDA multiple, okay? First of all, the 2025 EBITDA. Do you remember it? If you don't, well, I'm going to show it to you right now. Is $1.2 billion, right? Okay, let's put that in our calculator. 1.201 to be exact. We have an EBITDA. Now we need an EBITDA multiple. As we can see in the investor presentation, they used an EBITDA multiple of 9x to 11x, so 9x for the low end, 11x for the high end, which is relatively normal for SPACs. So let's take those numbers as well. First of all, the EBITDA, $1.201 billion, multiplied by 9, gives us a low future valuation of $10.8 billion, more or less, okay? Now, if you take that exact same number, so 1.201, and multiply it by 11, the high multiple we just saw, then is going to give us a high future valuation of $13.2 billion, okay? Then we can also say, all right, the average of these two numbers, we're going to call that the midpoint future valuation. So it's basically just the average of these two numbers. And that is going to be about $12 billion for the future for 2025. The next thing we can do is to take those future valuations and discount them back to the present. We need also two things for that as well. First of all, the amount of years, the amount of periods to discount it back. We have been taking a look at EBITDA numbers from 2025. We're now living in 2021, so 4 years difference. That's the first number we need to use for. And the second thing is a discount rate, right? As we can see in the investor presentation, they use a discount rate of 20%, which is basically similar for all the SPACs we have been doing valuation videos for. So now we can apply a certain formula to the future valuations we have just calculated in the previous step. Let's start with the low future valuation. That was $10.809 billion. So that's what I put in my calculator. We divide that rather by 1.2, the 2 here standing for the 20% discount rate. And we do that to the power of 4 because we needed to discount it back from 2025, 4 years back in time, to 2021, the year we're currently living in. And that is going to give us a discounted current enterprise pro forma valuation of $5.2 billion. Which is also the number that is over here in the investor presentation, right? Okay, if we do that exactly the same thing with the high valuation, so let's get rid of that, $13.211 billion divided by 1.2 because of the discount rate of 20% to the power of 4 because of those 4 years back in time, gives us a current discounted pro forma market cap, pro forma enterprise valuation rather, of $6.4 billion, okay? So then we can take those numbers, 6.4 billion and 5.2 billion, and that is going to give us a midpoint valuation of about $5.8 billion. And we can now go one step even further to calculate a fair market cap and a fair price per share. How do we do that? Well, first of all, we take those enterprise valuations we just calculated in the previous step, and we add back the amount of net cash. Because first of all, in the beginning of this video, we said, okay, if you want to reach an enterprise valuation, you simply take the market cap and take off the net cash, right? Now we do the exact same thing, but from the other end. We now take the enterprise valuation and add the amount of net cash to get a market cap, a fair market cap, if you will. And if you do that for these three enterprise valuations, the low one, the midpoint one, and the high one, you're going to arrive at these market caps. So for the low end, 5.5 billion, midpoint 6.1 billion, and high end the 6.7 billion. Then to arrive at a fair price per share, we simply need to take these market caps and divide them by the amount of outstanding shares after the merger, which we said at the beginning is going to be 151.2 million shares, right? So we do that for the low, mid, and high valuation, and then we're going to arrive at a low valuation of $36.54, a midpoint valuation of $40.37, and a high valuation of $44.20. So a fair midpoint price per share right now would be $40.37, which would mean that Momentus in its current state is undervalued. Of course, keep in mind, don't trust me, verify me, check if all the calculations are actually correct. And also take into account, very important, that we haven't taken a look at assumptions, right? We have been taking a look at predicted revenue numbers, predicted EBITDA numbers, a certain EBITDA multiple, and if you change one of those numbers, then the entire calculation is going to change as well, and the fair price per share is going to change as well. With that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye bye.